Hello and welcome to another update video about the S&P 500. I think it's time to update here again. That yellow support area is still on the chart from the last video. So we were already talking about a decline here in a wave 2 in the last video. However, saw two more highs since then. Obviously didn't update it for a while, unfortunately, but just want to catch up with things. Obviously a lot happened in the last few days. By the way, I'm going to change all these charts to the black background. I believe it looks better. Yeah, and it's a bit clearer. So we've got a situation here that is very similar to the Nasdaq in my opinion now. So wave count fairly similar. Again, the move up from the low that we created here in our trend reversal area back in October, the move up was only at best a leading diagonal. In the worst case, only a corrective wave pattern. But at the moment we can assume that in the primary expectation, we can first of all look at higher prices, yeah, similar to the Nasdaq. Of course, there is still the risk because it is, especially because it's only a leading diagonal. What happened here? There is still the risk that this is eventually going to break down. So this current correction that we see in ABC, highlighted here in red, is basically the stress test for this assumption that we could see higher prices. Yeah, the S&P 500 certainly dropped enough in this bear market to put a low in place. Yeah, we need to see how the price does now react to the support area we've got on the chart. And this will be the key decision. We're going to take a look at the lower level wave count as well. Okay, so that will be interesting. But first of all, where are we? So we put that leading diagonal in place. Peaked basically here at around $4,100, a little bit higher, in 5 waves. Yeah, and then we came down in an A wave. We moved up in an overshooting wave B in that was here on the 13th of December, and that was at 4,186. And we're now coming down in a C wave, very, very similar to the Nasdaq. I have to change, I think, the yellow support area a little bit. As I said, it's exactly in the same location as it was in the last video, where we already talked about a decline, but we assumed the decline happened, I think, started to happen already here, I think. Or it was here. So we had one more high to go with. So let me take a look at the fib levels, if it's still up to date. If not, I need to move the target area a little bit. Yeah, we're going to move it a little bit. And we're going to move it here into this area between 3,806 and $3,634, between the 50% retracement and the 78.6% fib level. That is the ideal target for such a wave 2. Now that's very high level. Yeah, this is where we only take the high of the wave 1, look at the fib levels, look at what wave is it would be a wave 2, and what's the ideal target. We can specify that a little bit further in that we obviously know already the length of the A wave, we know the length of the B wave. So one more way to calculate targets is we take the length of the A wave and compare that to the length of the C wave. And to be honest, here we are getting an ideal level of 3,858. So that might mean that correction could be finished a little bit earlier at the 1.618 extension. It is an ideal level. If you compare the length of the A wave with the length of the C wave, I would pay a lot of attention when the price comes down to that level, because there is no guarantee we will get into the yellow area. This is purely the ideal level for a wave 2. Yeah? Also, if I extend that trend line here, well, you can see we actually dropped below that now. That would rather suggest a little bit more downside, but would still be in accordance to both targets here, that we drop a little bit lower. Now, if we look at subwaves as well, similar to the Nasdaq video I just uploaded, I'm looking here in this C wave at a 5-wave move. So possibly here the wave 1, here the wave 2. I believe wave 3 is probably still going on, because we had within the wave C a 1, a 2, a 3, maybe now a 4, and one more leg down in the wave 5. So I think wave 3 is still ongoing. Then there will be a 4 and a 5. So also this is another way of calculating targets. I'm going to sketch that out now for you. So if we say, okay, we've got 5 waves here in wave C, then really looking at the absolute subwaves of wave 3, we have something like a 1 here, a 2. Wave 3 might be finished now, and then there could be a 4, might be ongoing now in this consolidation, and one more low down in a wave 5. Always bear in mind that these wave structures, these lower level waves, they are very fragile. Yeah, they can change quite frequently, so we just need to be aware of that. But what would be the ideal target here for the wave 3? Well, to get that target area, we take the length of the wave 1, we go to the high of the wave 2, and we can see that an ideal target here for the third wave would actually be the 1.618 extension. That is at 3,845. That would only be the wave 3. Then we could move up in a 4 and come down in 5. Textbook target would be the 2.618 extension at $3,694. So there's various ways of calculating a target. I think it's worth paying particular attention if we get to these targets. Certainly at 3,857, that move down could already be over because it is the ideal target for a C wave. So we don't necessarily need that additional low. So we'll see, because there's always different ways of how those sub counts can be interpreted. But it looks to me, ideally, we're going to move a bit lower, and I'll give my best to keep you updated anyway. And then we could move up in a wave 3 from here. Or if we lose that 78.6% fib level in the yellow support area, yeah, that is 3,640 pretty much, then we're most likely going to put in another low, and then we had only a corrective wave structure to the upside. Because let's face it, how many diagonal patterns did we have? I mean, this was also something like a diagonal to the upside. It also did not. Here the S&P 500 failed as well to create an impulse, and it lost the support, and something similar could happen again, because this is not a clear impulse. It's only a diagonal, and they are just what they are. They are less reliable than an impulse. An impulse makes the life for us analysts quite easy, because movements are very, very straightforward to forecast. However, in a diagonal pattern, we need to understand, first of all, that we are in a diagonal pattern or a correction. So, but they are very similar in their behavior. And then we know that wave counts, especially the lower level wave counts, they get less predictable if we are only in diagonals. So it's always that wave 2 here, that support area, that will be the stress test for any bullish scenario here. So that will be interesting. I think we're getting into another decisive phase of the market at the moment. Hopefully you liked the update about the S&P 500. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.